Welcome back. And earnings reactions continue for us, and Supreme Petrochem is the next management joining in on the show. It was a weak quarterly performance from them. The margins and profits were under pressure as well, but the company managed to achieve its FY25 volume growth guidance. To discuss this and more, we are being joined by Rakesh Nayyar, who is the Executive Director at Supreme Petrochem. Mr. Nayyar, good afternoon. Thank you so much for joining in. For growing for a better part of this year, growing between the high teens to the high 20s. Fourth quarter was a bit disappointing, right? At a 2% negative growth. What do you attribute this to? And do you see that just as a one-off and expect growth to return in the first quarter and so on in FY26?
Good afternoon. The last quarter, the margins were down because the global deltas were weak, particularly when the uncertainty on the tariffs and other things arose. So the deltas have been low, and that as a consequence of that, the Indian deltas were also low. But for the year as a whole, we have done well. Our profit has grown by 12%. Our volumes grew by 9.5%. And now going forward for the year 25-26, at the moment, though we plan to achieve a growth of around 13-14% in the volumes, but then we really don't know going forward if the tariffs cause any confusions or in respect to any disruptions in the market that may impact the volumes.
So have you factored in this tariff picture for your full year forecast, Mr. Nayyar? What is the current situation that you're witnessing on ground? How is demand currently shaping up? You mentioned about weak deltas in the fourth quarter. Has that percolated into the ongoing quarter as well?
The weak deltas globally at the moment, yes, they are there. Domestically, it's normal deltas at the moment. But then exports remain an uncertainty going forward this year we don't know how the trade flows will be and how the supply chains will move.
So at least for the first quarter, would it be fair to say that a double-digit growth in your top line is unlikely considering the factors that you're highlighting?
I wouldn't talk about the absolute numbers in rupees, but then in volume growth, we expect that we should be in line with the last year.
How are the current raw material prices shaping up, Mr. Nayyar, specifically for the styrene monomer prices? What is the pricing trend that you've been witnessing? They've been on a downtrend since March. So what's the current pricing scenario that you're witnessing?
The prices are further falling now. They have dropped since March, almost over 10 to 15% they have dropped.
And do you expect that to continue?
No, I don't think, because all is linked to the crude prices as well at the end of the day, and the crude is stabilized, these prices would also stabilize.
You know, you've historically also spoken about being a high double-digit growth business, be it on the top line front, be it in the EBITDA front, even for the margins. You know, margins also, now they've declined from 18% in that you had done in FY22 to around 9%. But by when do you expect normal levels to return? Do you see that 18% that you did in FY22 being a distant this thing right now?
See, FY21-22, that is the 22 one, I had said in the past also, that was an aberration because of the global freight rates were very high. The global plants some of them were shut down. So the deltas internationally were very, very high. And we also had an advantage of that. And that is how the operating margins were high in that particular year. That particular year was actually an aberration. And the operating margins have been in the lower double digits or very high single digits then. So around 10 to 11% operating margin is what we generally expect in this business.
Right. You know, you've achieved the upper end of your volume guidance for the year, Mr. Nayyar. It is around 355,000 tons. And you are expecting a 13 to 14% volume growth this time around. How do you plan on achieving that?
See, our new capacities will be added this year. So some volumes will come from that and some growth will be in our existing volumes.
Right. And there has been a large increase in inventories during the year, but do you see that as a cause of concern, or do you see that as a one-off and things to normalize? And how are you managing your inventory costs as well this time around?
See, those inventories are not our finished goods inventories. They are the raw material inventories, and they are the raw materials which are in transit at the moment. And that number, because of some bunching of supply, that number happened to be large, and that is reflecting as high inventories in our books.
So
So there is no cause to worry on that account.
So you expect them to normalize going forward as well?
Yeah.
And one final question, Mr. Nayyar. What is the kind of revenue mix that you're expecting this time around, breaking it apart from domestic to exports, and considering the export uncertainties that you've highlighted? Would you pay more emphasis to the domestic market this year till the export scenario normalizes?
No, we will still concentrate on exports to grow, apart from growth in the domestic market. But then what I said was that the tariffs may cause some disruption there. We, rather in our internal budgets, we expect that we will be able to achieve maybe better exports if going forward the tariffs come in. We would be better placed vis-a-vis China or other Southeast Asian countries or East Asian countries.
So what is the kind of mix that you are expecting between exports and domestic?
We would have almost, say, 15% in exports and 85% will be our domestic.
All right, Mr. Nayyar, thank you so much for sparing time and joining us today on the show. Wish you good luck for the rest of the year as well. The management there of Supreme Petrochem expecting the styrene monomer prices have dropped by 10 to 15% since March, but they expect those prices to stabilize, and also a statutory warning that the tariff disruptions may cause some impact on the volume growth. But of course, all of that currently is in an uncertain territory. The plan also is to achieve 13 to 14% volume growth in FY26 after achieving the upper end of their guidance for the current financial year. Still 70 points down on the index, but we take a short break. More on the markets on the other side. Stay tuned.